Hey, it's Mack with PriceActionTradingSystem.com, and it is Wednesday. It's April 15th. This will be our chart lesson for today. Interesting day. Um, Show you what I saw. We had a two-tiered channel working up, and then it kind of went flat. But in the end, it looks like we had a spike in channel on a little bit larger picture, and originally had a little bit steeper than this, and it may still be a little steeper, but either way, you get the break right here, a move to a new high, and then it sold. Then you had the correction. You can see that the channel came back into play again, but it's so late in the day, it doesn't matter anyway. But that's what I saw, and if you use your shorter term trend lines in here, they all kind of played out like you would expect them to. Um, We had a little range going around here. There were a couple of entries off the range, and then we moved to the new high, and then that was the first short that I think you could really realistically take, although there was one here. I'll talk about this one. I circled it in green for specific reasons, and I'll discuss that when we get to it. But let's back out a little bit, talk about the trades, and we'll go from there. But the first trade I saw was just right around the 7 o'clock hour. It may have been a little bit before. If you were here, this would have been tempting. Notice the new low, pull back first entry, pull back. Or actually, I'm sorry, you got a new low, pull back first entry short, pull back second entry short, and then it turned back up. And if you'd have taken that trade, you would have had to ride this out a little bit, but it would have worked. But that would be tempting to take if you were here trading then. It's a little bit early. I can't remember exactly. I think it was just a hair before 7 o'clock. I want to say that it had already set up by the time, yeah, it had already set up by the time I got in here. So I was thinking it was somewhere just prior to 7 o'clock. But if you were here, that would have been real tempting to take. I marked it in green because, you should be able to see this spike in this little channel working up here. And if you see that, it's just, you don't have a lot of room in there. So it's going to probably back up again, and then it doesn't back all the way back up to the midline. So it was just a little bit iffy. I don't know if I'd have taken that. Looking at that at the hard right side of my chart, you see what that would have looked like. But the fact that there's a trap there and people are trying to pick highs, and it looks, it's not a whole lot of overnight price action. So I can see people getting trapped short there. So, and it would have worked. So it's hard to deny. Then you get this pullback here, and this is right off the first few bars there. So it's a first entry, and there's no real break of this little short-term trend line. It did kind of shoot on through the EMA, but that's because the trend line was a little bit lower. And that's just a little bit aggressive entering that. It's a pretty nice bullish bar, but a lot of times that'll break up and pull back one more time. It did, but you had to let it rise a little bit. This was the better entry right here. So if you took that one, yeah, it's a little bit, you're gambling a little bit, but it did pan out and it would have worked. But I think it's a little bit too aggressive to market a blue one. Although it does confirm the trend line, this is really kind of like two swings here, and this kind of confirms it. So that's another reason to consider it. Just something to think about. But it gives you another entry, and not a whole lot of difference, maybe a point different. But notice it broke lower, turned up, and went out the upper side. Just go long right there, and that thing goes all the way up to a new high. Any runners would have been safe. And then you finally get your break here. It tried to trigger a second entry here, but it never broke higher. The second entry was actually above this bar, and you can't go long right there. It's too bearish. So just sit and wait. And I don't think you want to take a failed second entry trap right there either, because this is the first break. Yeah, it could go lower. If you did take that, it worked, but I just don't see anybody taking that trade. Again, I think it's too risky, especially with that support right across there, and it just bounced again. The odds are too great that this bounces right here. Even though it did work out, I think it's really risky. I think you're better off to wait on this long right here. And I like this long simply because you got all that support across there, and it's a little failed break lower and a reversal bar. That's the kind of bar you want to see for a reversal bar. We didn't have a break of this yet, so it was really, you really, I was really trying to decide if I should make this one green. But I think you got to go for this one because we know what happens when prices break through, especially when you're looking for a retest of the high anyway on this break. So, and that's a nice reversal bar. So I think you got to go with that trade. And then you get a failed second entry short right here to give you another entry. But again, you're back in this range and it's a failed break lower. So there's a couple of different reasons to like that trade. And you're still looking for the retest. So there's a good chance they're going to trap people before they run it up there. And then, of course, it gets back in the range once again. It's a little bit high. And then it breaks out the top and fails. And I circled this one in green. This fits the rules to go short, but I did circle it in green because we don't have a new high yet in place. It could turn into a breakout pullback long and push on up for a new high. So there's some different reasons to be leery of going short here. I mean, you don't really have, especially on a first entry, you just don't really have enough going on to say, hey, I want to go short here. Okay, I had a slight interruption there. I think we were talking about this trade, but I just think it's too risky to take this short. You just don't want to go short there. And I don't think you want to go short at all. Even when it breaks lower here, if you had this trend line working down through here, which, originally I told you I had it a little steeper. And so it looked like, it still looks exactly the same. It looks like we shoot right on through it. But we come back and test it and go on. But it does the same thing. So it doesn't matter what angle you had. But later on, it doesn't fit up here except at this angle. So that's the reason I adjusted mine. And you can tell it's right because it came back here and tested it again. So, and remember that little gap we talked about? We had that little bit of a gap right in there. So there's some reasons to. I feel pretty confident this is a valid channel we got working up here. But we got the break here. It came back and tested. It looked like it might go lower, but notice how far away this is from the EMA. This is more of it's been a upward trend with an upward bias most of the day. So you don't want to be trying to get short way down here, without it being a really strong trend. So just sit tight. I don't know that you really want to go long right here either. It would have worked. We had the break and a new low and then the little trap, but this bar is just still too bearish for me. And if you enter above this one, you're right back to the EMA. So I think you got to skip this trade. And notice it comes back and gives you another chance to enter. And I think that's why prices do this a lot, because the smart traders are a little bit hesitant to enter in here. And so then it comes back and gives them another chance to enter right here. And notice, even though this is not a great signal bar, notice that you got a new low, first entry pullback. There's a second entry short that fails and reverses. It bounces right off the trend line. First thing I would be thinking is, hey, we should get at least, hopefully, a measured move here. If you measure that and move it over, where does that put you? Right back up to the midline. You can see it got there, pulled back a little bit, and then it took the next leg up. But notice, I marked this trade. Notice that you got a trend line working up. That confirmed it. And even though prices didn't break lower here, I want to discuss this one. It still acts like a breakout pullback long or a failed second entry short. There's a couple of different ways you can look at that, but it's a bounce off that trend line and look how bullish that bar is. And at that point, I'd be looking for measured move here. You can see we got within a tick or so of that. So, um, but you want to probably exit up here right at the where this line would be. You would have copied this line and drug it up. So, uh, and then of course you get your break here. There's a second entry long, but hopefully you can see that congestion. You're right here at the highs, you know, a little double top. You don't want to be going long right there, the high of the day. Just wait and see what happens. And of course, it fails out the low. This is just, there should be, hopefully you recognize this. Let me go ahead and put it on there because I don't have it, but it's a little trading range. All those matching highs, all those matching lows, and it you get a failed breakout with a bullish bar, and you're looking for it to try to make a new high. There's room for it to make a new high without breaking above the trend channel line, and that's exactly where it goes. And then it corrects. I don't think you want to go long here. It's a first entry. Really, there's a first entry, and then it goes lower, and then it turns around and comes back. So it is like a second entry long there. But again, that's congestion, all those matching bars. Too big a chance this breaks higher and turns down. So just wait. And of course, it comes up here and makes a double top and turns down. So when it broke below that bar, I liked entering here with a limit order. And I know it would have filled it. Even if it didn't on this bar, it came back here and filled it and then went lower. I don't think you want to enter here. It's too close to the EMA, and you still got that line in play right there. And it's after 2 o'clock anyway. So this gets you, let me see if that one's after. It's real close. Yeah, that's after 2 o'clock. It's not a very good setup any way you look at it. And then you get your failed second entry long here that would have been a great entry, but it's 2:30 by then. If you're still trading, that's a great setup, but you know, hopefully you're done by then. So, but that's what I saw today. Pretty good, some pretty good. There weren't a lot of trades today, but the ones that you got were decent trades. You didn't get a lot of runners. There were a couple of runners maybe today, not many. You would have had one here. If you went short here, you probably would have had one here. You would have had one here, and that's really about it. But we talk about that all the time. Where do you generally find your runners? They're off the key. They're at the key entry points, which are off the trend lines. Off the trend lines, and the traps, like here and here and here and here. You might have got a runner on this particular trade. No, I don't think you would have got a runner there. You might have. It depends on how you entered that one. So, but generally your key entry points are going to be are going to be the main trend lines, especially when the main trend line and the EMA match up, like right here, and the traps. Those are where key entry points usually happen. And that's where you usually get some runners, wherever the traps occur. So just keep that in mind. But back out and look at it one more time. It's just a spike in a channel. And a little more micro, you got a channel working up, a break. Attempt to move to a new high. But then and let me show you this too before I forget. I almost forgot about it. But you got your first leg down right here. And then you got a two-legged correction in there. And then you're looking for a measured move. And you can see we pretty much got it. It went a couple of ticks lower. So just remember that. Remember those two-legged moves and so forth are usually center points before a bigger move. And here's something else to look at too. I didn't show this, but here was your first leg up and then your correction. And so you were looking for that for probably a target today. And you can see we got within a couple of ticks of that. So real close. And that's really about it. So not much else I can say about today. Again, just not a lot of entries, but enough to make it a decent day. And actually, I want to say this. It brings me to a point. I say this a lot, but and but somebody asked me today. They said they just asked me about how boring the trading has seemed to gotten lately for them, and they just wondered, is it always like that? But I say this a lot. When it starts to get boring for you, that's a good sign that you've made it or you're very close, because until you get rid of the emotional aspects of trading, you will probably never be really successful at it. When it becomes, once you get there, it's like a job, and it's the same thing every day, watching prices go up and down. So it gets really boring. But that is a good thing in the big scheme or big picture of things, because it means that you're losing emotional touch with trading, and that's something you will eventually have to do to go to the next level, so to speak. So your first step in trading is really just to understand how to prices and to be able to read them, and to be able to make money on the simulator. But then there comes part two, which when you have to transition from the simulator over to live trading. And when you simulate, when you move from the simulated trading to the live trading, it's different. But if you can't do it on the simulator, you can't do it live. So don't go in and waste your money and try to live trade until you can do it on the simulator. Because I can promise you, I know what will happen. You will go broke. You will run out of money before you can make it happen. Trust me on that one. So learn to trade on the simulator, even if you do in the back of your mind know it's not real. It works exactly the same. Even a few short years ago, you couldn't say that. Um, Limit orders wouldn't work properly, and the trading just wasn't the same. But today, on this chart, I can flip back and forth between live and sim, and I'm using the same data, the same charts, the same everything. The orders work exactly the same. Nothing changes. You can't. It's the close. It's exactly like live real trading, except you don't use real money. So the old adage that it's not the same doesn't hold anymore. So don't buy that argument when you read it or hear it, or when you inevitably go to your forums and you read people saying that sim trading doesn't work. Don't believe that. It does work. It helps you get better, and it allows you to get better without wasting all your money. And then once you can do it on the simulator, yes, you still have to flip over to live, and you still have to go through that emotional piece of it. But at least you already know how to trade, and you've proven you can do it. So now you just have to learn to do it and block your emotions and your mind out of the trading part, and that's step two. So it is a twofold process of first learning to read the chart, you know, learning how to know what prices are doing here and what they're telling you, and following the rules that we teach. That's what you need to be doing on sim. Don't waste your money trying to do that. And I don't care, even if you've got deep pockets, I promise you, you'll lose it before you learn how to trade. And so if you don't put any money into it, you can't lose any money. And so, and then once you've been able to maybe double or triple a sim account, and maybe even do it a couple of times, then hey, I can do this. So now let's flip over to live and just start slow and work your way up and work on that mental aspect. But yes, when it starts to get boring, back to the original point of this, is when it starts to get boring, um, you're close, or you're maybe even there. You're real close, because that is one key to being a successful trader, is to be able to eliminate the emotional aspects of trading. If you still get high on your wins and low on your losses, you got work to do. You're still too emotionally attached to it. This is a job. You should expect to win every trade, and win and you should also understand that, hey, in order to win, I got to lose a few. So when you lose, you can't let it get you down. You just forget it and immensely go on, and the odds are on your side. Hey, I had a loser, and if I can trade at 80%, then I should have a couple of winners in a row now. And if you can have that mindset, you're going to be more successful. So that's the point you should get to. A winner doesn't get you excited, and a loser doesn't shake you up. It's a job, and you just keep doing the same things over and over, knowing that the odds are on your side, and if you can read the chart right and do what you're supposed to do, the percentages will work in your favor, and you will make money in the long run. That's it in a nutshell. Um, but if you still treat it like a casino and you're trying to get rich quick, and you get high and you feel good when you win, and you get down and you feel bad when you lose, and you got a lot of work to do. Trust me. So, not much more I can say on it. I'm gonna wrap it up. Hope you had a good trading day. We'll be back again to do it tomorrow. This is Mack with PriceActionTradingSystem.com, and we'll see you next time.